Hello everyone, welcome back to the channel. In today's video, we are going to break down Meta from a technical lens. We're not going over any fundamentals. We're just going to look at the chart and figure out what might be the best entry and what might the chart look like moving forward. The first thing I want to go over is this setup where we are creating this uptrending line on the chart that looks very good for support. The stock keep bouncing on it and slowly moving forward. One thing I want you to understand about support is that doesn't matter if it's uptrending or it's in a straight line. Eventually they do break down for various different reasons. And in this case scenario, I'll explain you what the reason might be. But if we zoom back a little bit here, actually, let's go to Oracle stock for a moment. I made a video on Oracle a few days ago and I was telling everyone that this trend line that the entire Twitter and stock tweets, YouTube, everyone is watching this trend line is going to break down, and that is exactly what happened. I don't know how long we're going to stay in this range or if we're going to go lower or not, but the point is that great support lines eventually do break down. If we go back to the Meta chart, we had another great support line which I didn't think we would ever break, but if you look at it over the period of 4 or 5 years, we eventually came back and dropped below it. Now, this might not be a great example because there was a huge fundamental issue with the company at that time. They were burning billions of dollars on the metaverse, but I'm just trying to make a point that good support lines eventually do break down. But within the larger trend, you can always find other types of support that might have broken down as well. For example, I'm sure that at that time frame, this support looked like the one that would never break, and we did go below it. If I remove that, we can create a trend line right here, which is a straight line. This was also a support line which got broken down. If we go back a little bit, we can create a uptrend line like this. From that point to this one, we broke down below that as well. Let's move on to the next part. Why and how might this support line break? Let me draw a highlighted box here, and what I want you to see is that every time the price goes into this highlighted box, the market rejects it. We have sellers coming in, either the people who bought here are exiting their positions, or short supplies coming in, or whichever way. We do not know what is happening in the background, but we can clearly tell on the chart that there are sellers present right in this box. And that is all the evidence that I need to understand that no matter how many times we tap into this box, we might go into it again, come back down and go back into it again. It doesn't matter. We will eventually come back down again and finally break towards the downside. Now, how far down do we go? I don't know. Maybe we just sweep this level, come back down here, bounce on the 200-week moving average, and then jump back up again. And on that drop, we could also possibly sweep this line. And if that happens, that would be a very good coincidence because we just swept this key level that was the 2025 tariff tantrum. We will sweep this level, we will break below this trend line, and we will bounce at or around the 200 weekly moving average. And I think below 500 might be a very good entry for the stock. But either way, this supply zone holds strong for now. And unless we go down to flush out the weak hands, and unless we go down to find more money, more buyers, more institutional holders, we do not have the strength to break above this. Let me zoom out and clear this chart for a second. If we go back to 2021, there's also this trend line. Not really a trend line, it's just the previous swing high. There is a chance that down the road, maybe in a recession time frame, we do come back and retest this previous high, come back down, sweep that level, and then retrace back towards the upside. That is a very big possibility, and I know it might not seem like it right now, but given that we have a supply zone here, given that we have created this uptrend line, and on top of that, you can add the midterm year volatility, add the AI capex spend, add the debt that companies are taking on, and the uncertainty that is going around in the market, there is a chance that we do come back under $400. But for a second, let's not be all doom and gloom and bearish, right? Let's draw another trend line which is coming down this way. There's also a slight chance that we get to the edge of this wedge formation and then break out to the upside. And this upside move has to be fundamentally backed up because it won't be just as straightforward, right? We might come back up, come down to retest this line, and then continue higher. But for now, I do not see any evidence of this. We need to see a dramatic upside change in the fundamentals of the company, and we can only know that after the earnings report, right? But for now, the only evidence I see is that there's a sell side pressure here, and the stock should be coming down. On the upside, the stock has more to prove. If we're going to break out here, we'll just have to wait and see. And in case we break out on the coming earnings report, understand that there's still a path where we break out to the upside and then come right back down below this uptrending line, and finally print a bottom that we need to print for a proper leg to the upside. So there's so many possibilities here, so many variations. This is not a stock that I'm touching, but if you are long or if you're looking to enter, I think the risk reward is better if you wait for sub 500, even better if we wait for sub 450. And with that being said, I hope you found value in this video. Please leave a like, subscribe to the channel, and I'll catch you on the next one. Thank you so much for watching.